Welcome, one and all. Welcome back to TakeStock Live, every Wednesday, 15 minutes after market close. We're well into the second season now, running every Wednesday into October and probably even into November, from the sound of things. Thank you very much. This week, we'd like to thank CHF Capital Markets for providing the lineup of 3 tech companies. CHF Capital is a Toronto-based investor relations firm which has been a trusted partner for many public companies operating in mining, technology, healthcare, oil and gas, and special situations in Canada and worldwide. Its team consists of a diverse pool of talent that combines analytical and creative skills, making it a one-stop shop for all your communication needs in the public sector. Next week, we welcome CHF back, actually, with mining, IPG, and SIC. We'd like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize the vital support provided by our core sponsors: Fasken, MNP, Lead Jones Gable, Olympia Trust, and the CSE, who helped us launch the forum back in 2014. We'd also like to thank our extended network for their support in launching this initiative. Thank you to Calgary Meg, to CIM, to the Manitoba Saskatchewan Prospectors and Developers, to Sterling Capital, and to Conduit Capital Advisors, and many others. Especially, we'd like to thank Investmentpitch Media and the Newswire for helping get the word out. At this point, I would like to turn it over to my colleague, Mark Francis. Take it away, Mark.
Thank you, Raj, and welcome all of you, our attendees and guest presenters. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock, and TakeStock and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some professional matters, some housekeeping matters for attendees. You will note a red Reconnect tab at the top of your screen if you lose audio. Just click it and you will be reconnected. Normally we run just under 45 minutes and we will allow the chat board to be utilized in this session. Please be clear about to whom your question is addressed, and let's use the chat board for serious investor and technical questions. Today we have 3 tech companies. Each company will have a presentation with their PowerPoint, followed by a panel discussion with Q&A led by yours truly. We encourage you to do your due diligence, go to SEDAR, and connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website, takestocklive.com. Today we have John Putters, co-founder and CEO of Visonstate, VIS on the TSXV, Jay Hutton, co-founder and CEO of VSBLTY Group Technologies, VSBY on CSE, and Silas Garrison, CEO of HeralthSpace Data, HS on CSE. So starting with John Putters, John is an entrepreneur and graduate of the University of Alberta. He has spent over 25 years in the technology space, where in several industries he has disrupted the traditional way operators manage their facilities. And it should be noted that John has been nominated twice for the Ernest C. Manning Award for Innovation in Canada. John, welcome.
Thank you very much, Mark. Appreciate the introduction, and thank you everybody for participating today. I have 6 minutes and I'm starting my clock now. So Visonstate Inc. is the main operating division of Visonstate Corp., which is traded on the TSX Venture Exchange, It's an IoT company that is focused on solutions, particularly for the facility management industry. The company's products include Wanda device, which is a 10 to 15-inch tablet that is often placed outside restrooms. And two new products that we just introduced to the market in the last 3 months. Mobile app, which enables facility managers to track cleaning, maintenance, and other activities throughout a facility. And also Wanda Quick Touch IoT buttons, which is designed for fast deployment and generating alerts from restrooms or other areas of a facility. I think the most important thing that I can emphasize with our product is that because it provides a digital trail on cleaning activities, maintenance activities throughout a facility, it significantly reduces exposure to liability. In the days of COVID-19, obviously, this has become extremely important. And in the last 4 months, our business has basically skyrocketed as a result of it. Because traditional ways of tracking this information, which is predominantly paper-based, we've all seen that before, really is not equipped to track the kind of information that needs to be tracked in today's world, particularly as it relates to cleaning compliance. We also integrate with third-party sensors, so we work with some very big companies that supply soap, toilet paper, paper towel, and foot traffic sensors, which all goes into our analytics database. And we produce some very, very interesting information. Just to give you an example, because we track hand pumps on the soap dispensers and traffic through a restroom, we can algorithmically give an average of how many people are actually washing their hands in that restroom, which is obviously very important in today's day and age. This is just a quick example of some of our analytics. To the left, you can see the dashboard where it's tracking everything from alerts to traffic, cleanings, employee performance. And then the bottom chart shows something that we recently released with our mobile app, which is tracking compliance to the cleaning protocols, which are all new in the marketplace. Currently, we're all over North America. Again, like in the last 4 months, particularly in the last 2 months since the economies have started reopening, there's a need to be proactive on cleaning and demonstrating that to the public, and of course, protecting against potential liabilities. But some of our most recent significant installs has been Blackstone in New York, one of the largest private equity companies in the world, Roche Pharmaceutical, which is using the product to indicate cleanliness in the lab environment. So once a test is done on a particular drug, they need to clean it thoroughly and reset. Queen's University, everybody's familiar with that. We just signed a deal with them. And we recently launched our Wanda mobile product in 55 locations in warehouses across Canada. Basically, on the revenue model side, we work as a SAS model, so we charge a monthly fee for each device and also an annual site license fee. I see this slide's a little old. With our main partner right now, we also have implemented a service contract where we're getting a retainer every month for priority development. Some of the significant move forward on our roadmap is we're partnering now with large companies to integrate third-party sensors, and as a result of it, the Wanda tablet itself is becoming a hub of data. For smart restrooms, it's all being collected by us and served through our analytics. The other thing is that we've been responsive to what's happening in the market with regard to COVID. So now we have occupancy levels that we can display. And we also introduced a new feature where the public can give feedback based on, without touching the screen, scanning a code and doing that on their handset. So lots of things on the move with us, and we're pretty excited about it. This is the details on our public listing. So we're trading at 5 cents as of very recently. You can see what the 52-week high and low is. And we have a great team behind us. We have a great management team, very skilled technical team, and backed by that is a great IR company and CHF Capital Markets. Thank you very much.
Thank you, John. You were bang on. And now, Jay Hutton. Jay is a 25-year software executive, having founded 3 companies, including 2 public companies. He began his career at Gandalf Technologies and later served as VP of Ascend Communications during their rapid growth public offering and ultimate $24 billion sale to Lucent Technologies in 1999. Jay has spent more than 10 years in venture capital and private equity as well. Jay?
Thank you very much, Mark, and thank you everybody for attending. I'm going to start really quickly with a little bit of a description of the marketplace that we address and what's unique about us. We sit in this category known broadly as artificial intelligence. If you break that category down, which is a very broad category, we sit specifically in the arena that is known as computer vision. So we teach computers how to talk to cameras and interpret camera streams real time and live. So we collate, report, and identify things of note within streaming video. The application, of course, is sold to our marketplace under a SaaS, software as a subscription model. We interpret and measure data for the purposes of 2 discrete marketplaces. One, retail, and the second, security. We're looking for similar things in those marketplaces, but quite different things in many regards as well. In retail, we're looking for things that are noteworthy and interesting to retailers and to brands. Pepsi wants to know if the 35-year-old females are paying attention or the 25-year-old females are paying attention. This is data, this is information that algorithms in conjunction with sensors can pick up live in real space using video streams and artificial intelligence for using algorithms. So we analyze consumer content to the benefit of retailers and to brands. And for the purposes of security, we analyze video streams for what you might imagine to be relevant security components like persons of interest or weapons detected in physical space. This is what the capability of the software provides for in those two marketplaces. So we sit astride those 2 marketplaces. We like to talk about the organization under the tagline of we're the nexus of marketing and security. We sit right at that intersection. Those 2 marketplaces are actually growing at significant rates. 32 billion with about a 9% compound growth rate in retail, and 187 billion current size with about an 11% compound growth rate in those 2 marketplaces. So in retail, our hypothesis, our story is we're grabbing a hold, we're hooking into the growth that is occurring in retail right now as stores embrace digital transformation. What that means is instead of printed materials to deliver messaging in retail, that movement, the migration is to digital platforms delivering that message in retail. In addition to delivering that message in retail, which is a part of what we do, we measure the performance of that delivery. In other words, if we're deploying, if Pepsi is launching a new energy drink and they're launching it to 25-year-old males, we can trigger and direct the message to 25-year-old males and measure the effectiveness of that communication to those males in multiple metrics. We can gather metrics about how many people are standing in front of a particular display, how long, and the breakdown demographically of the people in front of that display. And of course, we can connect that to the transaction log. So of the 25-year-old males that were in and engaging with the display, how many of them ended up buying the product. So this is transformative for retail. It's actually what we've been waiting for a long time in retail. We're sitting somewhere in the neighborhood of 5 to 7% of digital penetration in retail as we speak, as of right now. And based upon various metrics from Gartner and others, the metric in 3 years is 80% penetration. So we're right at the front of that. And just as a quick comment about visibility as a financial performer, we're a 4-year-old company. We went public in February of 19, and this year is when we're breaking out. Our first quarter was a record quarter in the company's billings. Second quarter carried that cadence on, and this year we're expecting to close in between 4 and 5 million of revenue recognized, which to us is a breakout year. Again, that's all software as a service revenue, and it actually tees us up quite nicely for a 2021, which is north of 18 million in revenue. So how do we transform public spaces? Again, I'm going to go quickly through this. Facial analytics, identifying and logging the nature of the person's view, all of it done in a privacy compliant way, delivering to retailers and brands consumer behavior and consumer demographic data, which of course allows them to optimize the store experience. We also do this for the purposes of security. In a retail application, it might be this particular person has several times been involved in theft, and we're now looking at identifying that person proactively next time we see them in retail. So nothing dominates in-store like digital. I said that before, and here's some metrics that support that. So we're key to Visibility's mission and direction. Our objective is to identify the largest channels in our marketplace and make them partners. And in 2019, and certainly inclusive of 2020, we're lining up these multi-billion-dollar globally oriented partners that will help us execute. So our proposition to them is we're going to give them world-class, super agile, world-beating software, and they will bring to us their distribution network. And that's working pretty successfully for us so far. Some examples of an application in retail, in particular to support my comments earlier about how digital is deployed in retail and what its meaning is. What you might not know is right in the middle here, on this end and on this end where my mouse is, those are all embedded cameras measuring every possible engagement type with the display. Another example would be a deployment we've just started in July in CVS. It's at a few hundred stores in the US right now. Incorporating in this, I don't show this in this slide, but incorporating in that slide is the ability to pull IoT data directly from the internet for pollen counts. So live, real-time data delivered in store. The net is you sell more product. And of course, COVID reopening, we're benefiting from the fact that we've got multiple computer vision-based capabilities that use computers to provide for a safe workplace environment. Density, crowd limiting, people counting, and of course, alerting. That's visibility. Thanks for the time.
Thank you, Jay. And you were about 2 seconds. That was well-timed as well. Rounding it out, Silas Garrison. Silas is a tech entrepreneur, previously serving as the company's chief technology officer. During that time, Mr. Garrison oversaw the development and deployment of HeralthSpace's premier platform, HS Cloud Suite. Mr. Garrison has spent nearly 2 decades delivering technology solutions for government agencies all across North America. Silas.
Thanks, Mark. Appreciate the intro. So HeralthSpace at its core is a software as a service, or a SaaS company, as it's better known, to state and local governments all across the US and Canada. Our software solutions are utilized by over, give me a handle, I got to get to the button, there we go, by over 500 government agencies on any given day. So we have a broad swath of customers across the US and Canada. And we have agencies both large and small. We have some, customers that are rural county with population sets of 30 to 50,000 people, all the way to statewide deployments, such as in Tennessee, Florida, Colorado, and beyond. So our software is applicable to agencies of all sizes. At its core, our mission statement, or one of the core ethos that we subscribe to, is just to make government more efficient. Government bodies have a lot of data collection that goes into managing their regulatory processes, and our software helps them efficiently manage every aspect of that, whether it's from back office billing and accountants all the way down to field inspectors who go out into the field and perform sanitary and health inspections. So our software is utilized on a broad set of use cases. And really what government is looking for is a set of digital solutions that will help them manage vast amounts of data. Right now, as our core customer set, prominently 95%, is made up of environmental health departments. Environmental health are those agencies that regulate private businesses from a health and safety aspect, such as restaurants and food service, or pools, hotels, a long laundry list. Over 20 different industries are covered under environmental health, which is the majority of our customer base. But as we continue to expand, we're now actually selling into other areas of government, such as public health. That came about because of COVID-19, actually. We also have departments of agriculture utilizing our software, and we're eyeing other areas of government, such as code enforcement. We're also creating accretive lines of revenue through additional product offerings over and above our SaaS solutions, such as online payments. And we're also looking at ways to monetize the end of the spectrum where private businesses have to interact with government and leveraging our technology into that space as well. So government, as I said, looks for cloud solutions predominantly these days. Government tends to trail the private market by several years in terms of their technology adoption. And only very recently was cloud very relevant to government. And now it's the prevailing choice. However, most of the vendors in this space do not have cloud or mobile solutions to offer. The other thing is that they're trying to create streamlined efficiencies by offering up online services through web portals and websites that their constituents, whether they be citizens, private businesses, or what have you, can interact with that information that's all stored in a back office system online. So our product suite is comprised of four main areas. HS Cloud, which is our enterprise cloud platform. That's where everything kind of begins and ends. If you are a government employee working for one of the agencies that are customers, you're going to have a login to HS Cloud to manage your workflow, your daily schedules, and much, much more. HS Touch is our mobile component. This is what field inspectors will utilize to go out into the field and perform sanitary checklists. And then we have My Health Department. This is targeted at the private businesses that have to interact with these health departments. And then HS Pay is our online mobile payment solution, kind of a fintech component to our whole software package. HS Cloud, if you can remember one thing about it, it's self-serve. When government goes out to procure digital solutions, wherever the use case may be, there's typically a lot of friction that comes with that. That friction comes about, one, because it's not easy for them to just flip a switch and adopt a technological solution. There's lots of people that are involved, lots of decisions that have to be made on how that software is going to be utilized. And most vendors in this space, most of our competitors, take a very manual approach to that. And what that means is a software engineer has to be involved. In order for them to get from point A to point B and make the system work to that particular government agency's specs, typically they have to kind of code it or engineer it from the ground up. HS Cloud flips that paradigm on its head and allows for a full self-serve enterprise cloud platform to be done by the government themselves. They can go in and make adjustments to their data entry, their workflows, and much, much more. HS Touch is the mobile component. Another one of the key selling features of our product suite is allowing government inspectors to go out into the field with an iPad or some sort of mobile tablet device and works disconnected from the internet. They don't actually have to have a Wi-Fi or some sort of mobile connection, which is important even in this day and age that you don't always have access to internet. And this instantly synchronizes up to our HS Cloud platform once a internet connection is established. My Health Department, this is what we call the digital replacement for the government office. It is simply a way for the businesses to interact with every single piece of regulatory information and capture that. What we believe for us long-term is that this will be a future revenue stream that will allow us to capitalize on the captive audience that is kind of being brought to our website through the government. HS Pay, one of the more exciting innovations that we've been working on, is an online and mobile payment solution that will allow the private business operators who are required on a yearly basis to pay for their licensing fees. Within our current customer base, this represents over $300 million a year that right now, the majority of that money is collected through paper means, check or cash. We can actually be the online payment processor for these departments. And by doing so, we can take a half to a full 1% of every single transaction that comes through there, representing a new revenue stream above and beyond our SaaS contracts. And last but not least, I will touch on the fact that our contact tracing module, which came about because of COVID-19, was one of our new selling points that we will be able to sell into a new marketplace. This is just a snapshot. I know I have like 5 seconds here of how big the marketplace can get. Currently, our revenue ARR is at $3.7 million, and we project by end of next year to be at $8 to $10 million in ARR. Mark, I'll hand it back to you.
Yes, I think if you just want to page through that. Anyway, thank you, Silas. And now we will bring back John Putters and Jay Hutton as well for the panel Q&A. Very good, gentlemen. So my first question, because we had the three of you on about 4.5 months ago, is regards revisiting the questions of customer acquisition cost and margins. Have these shifted at all in the last 4 months? And let's start with Silas and then John and Jay.
So our customer acquisition costs are actually fairly low. You know, we have a sales team that's in-house that handles all of our customer acquisition. And it's a very lightweight team in terms of number of people. And we're very efficient at what we do. You know, the government is kind of a finite market to sell into. And a lot of our sales come through word of mouth spread. And so from a cost of acquisition, it's fairly cheap. Also with COVID, nobody's really flying or doing in-person meetings. So we're able to do a lot online. As far as margins go, you know, we're still in a high growth mode. So our margins are relatively the same from the last time we spoke.
Shall I address that one? Okay. So I don't know that we're as evolved as Silas's organization. So much of what we do is evangelical in nature. We're educating as well as selling. The good news is, as you educate less, you can sell more, and you actually approach a client where they've got a level of knowledge before you have to engage with them. You don't have to bring them from ground zero. So over time, as our segment evolves, both on the retail side and on security, we're actually evangelizing less and selling more. And of course, we have the added benefit, as Silas mentioned, of virtually nobody's traveling right now. So I'm delighted. As an operator, that delights me. So we do more, and frankly, we're considerably more efficient as it is. So when normalcy returns, maybe we'll find a way to be a little bit more prudent on our spend on T&E as well as other things. But our margins really have stayed essentially the same.
So we sell our product through large global resellers, including Bunzl, Veritiv, Compass, Airmark, companies like that. So our cost of customer acquisition is extremely low. It enables us to focus on the technology and continue rolling out new technology. Recently, we signed a new deal with a company that is a major manufacturer of smart devices, and they're going to be bundling their solution in with us and becoming another reseller. Our margins have actually gone way up since we launched our mobile app, and we're looking at about an 85 to 90% margin on that. So I think we're doing very well, particularly since the focus now is on cleaning and meeting cleaning protocols. And this is important to every company that I just mentioned, including their customer base.
Very good. So on this one, we'll go Jay, John, and Silas. Organic growth from profitability versus growth funded by capital raises is a constant challenge for tech companies to decide which path to take. Often when you've got a land race, if you will, a space race. So there is an argument for each. Which is your strategy, and how do you see that going forward?
Well, having just concluded last month a $5.6 million Canadian raise, we are projecting that that's the last equity raise we'll have to do as an organization before we reach the profitability point, which is projected to be the end of this year. So I think we have pivoted from the capital required to support the growth of the company to an organic model. As we deploy our customers, really, we're looking for market accelerators, force multipliers. Like John, so much of our business is through distribution. And because we've been lucky enough to find our product in design wins, we call them, where our product is implemented in the core of another company's technology, then that's going to enhance our ability to grow organically. And we just let them go after we've secured that design win, and our margins will be benefiting because of that. So that's our objective, and that's where we think we're tracking to.
On our side, probably a little bit of both, actually. Our preference is organic growth, obviously. We continuously try to motivate our resellers to meet their targets, and they're starting to do that. So on the capital side of things, we're looking at possibly doing another raise, but we're very cognizant of dilution factors. So we're trying to minimize dilution and maximize our organic growth. And I have to say that the COVID-19, and I almost hate to say this, was a turning point for the company because cleaning protocols were taken for granted. Often people would just sign their name on this silly piece of paper and walk off. But ever since, really March, suddenly cleaning is a major thing. And, just recently there was a seniors home here in Edmonton that got sued for $10 million because people died. And it turned out that they weren't cleaning the place properly, among other things. So, it's a cheap price to pay for protecting yourself against that kind of liability. So we see our organic growth really going up, and that's going to bode well for getting to profitability very quickly.
Yeah, so for HeralthSpace, our focus is obviously on high growth, as I would say anybody running a company is. And for us, Jay said something actually on our last presentation talking about execution capital. And for us, we have a significant amount of revenue, both from the professional services that we charge, also to the recurring maintenance that comes out of each customer. We have a significant amount of revenue before us. I was mentioning just at the very last 2 seconds of my presentation that we're at 3.7 million under contract and project to be at 8 to 10 by end of next year. And so for us, whether it's organic, we have plenty in the roadmap, both with existing customers and future sales pipeline, to be able to capitalize on that. But as we all know, between AR cycles and getting that money in the door as fast as you need it is always can be tricky. So we're just paying that, fine shift between how much capital we need to meet the future growth. So we're going to have to continue to hire heads. We've doubled our head count over the past 12 months. We were at 18 this time last year. We're at 42 now. So for us, it's not something that we want to do in terms of raising capital, and it's not something that we have on our near-term plans. But as always, high growth companies sometimes eat up a little bit more cash early on as they're hitting those next echelons of growth. And so we just kind of have to play the cards as they're dealt, each quarter.
Okay, very good. Well, you bled into my next question. Technology is hot right now, and many companies are expanding. The three of you all have growing sales. What competition are you finding in regards to hiring new staff for expansion? So let's start with you, John, and then Silas and Jay.
Unfortunately, the market in Alberta isn't all that good right now. And frankly, I think it's 18% unemployment. So we're not having a big problem in that respect. We do have an extremely talented staff. All U of A grads, I'm proud to say, because I'm an alumni there as well. So that doesn't really affect us, to be quite honest.
So we have gone through many gamuts of finding the right people, and we have the fortunate ability to be able to hire kind of all over North America. And so that's actually played in our favor because we're able to source the best talent for the team, regardless of where the person physically sits. And for us, we've actually found a lot of tech talent actually out of Western Canada, primarily in British Columbia. So there's been some really strong developers and engineers we've hired out of there. And we're also finding some good operations folks, those who work with our customers out of the US. So while competition in the tech space from a hiring standpoint is pretty stiff, it really is only relevant if you're trying to hire specific types of engineers in specific areas, aka San Francisco or California. So for us, it's not really presented actually an impediment. We've been able to find really good talent through our searches.
I'll echo that, frankly. For us, we sit in artificial intelligence, specifically in the subsector of computer vision. And the truth is, globally, that's a rare find. COVID displaced a lot of people and a lot of good people. And what we found is if we broaden our reach to not be region specific or location specific, more skill specific, we can find the people. In fact, in the last 90 days, we've added 3 technical people on our development side: VP product development, director of development, and the data science engineer. And those people weren't available to us, certainly not the price we got them for before that. I mean, these are world-class people, and for us to have them available to us really is a result of some of the sort of random removals of people that happened as a response to COVID. So for us, we've been happy with it, with access to talent so far.
That's good to hear. You've each come up with a solution. Now, COVID aside, we seem to be entering a period of economic dislocation. And at some point, these large government deficits are going to get trimmed back. And, the equity markets are concerned about which companies will show growth, which means your current and prospective customers may, in fact, also be facing a bit of change, whether it's physical locations and malls, et cetera. So how are your current and prospective customers faring? And what do you think the future holds for them? So let's start with Silas and then Jay and John.
So for us, our core market being government, we're a bit fortunate there. One of the things is that a data solution when it comes to regulation, both on the public health side and on the environmental health side, whether it's your disease tracking and surveillance, whether you're regulating a restaurant, those software applications are looked at as necessities, which means they're going to inevitably end up in the government budget. And so we benefit from that. The other thing is in the US, from the most recent CARES Act, $500 million was earmarked to go to the CDC for the express purpose of actually funneling that money to state and local government agencies to digitize and modernize their ability to keep up with epidemics, outbreaks, and things like that. So for us, we don't see a big challenge or issue ahead. As government budgets shrink, it may lengthen sales cycles, but we don't see any near-term or even medium-term roadblocks for us.
For us, we have 2 sort of segment exposure. We have retail and security. And if you look at retail, the subsector we're most exposed to or most aggressively commercially involved in is grocery. Grocery and drug, really, 1 and 2. And though you might think that retail has been negatively impacted by COVID, and that's a true statement, groceries numbers were up in the second quarter, not down. And drugs numbers were up in the second quarter, not down. So even though if you look broadly at retail, electronics, DIY, mass market, all those numbers in those categories are down. The 2 marketplaces that we're most exposed to are up. And the second part about that is they're actually accelerating their technology adoption. It's sort of counterintuitive in a lot of ways, but we're going into conversations that were not initially planned to be having till 2021, and those conversations are happening now. So why that's happening, I suppose, is a matter of some speculation, but that's happening. On the second marketplace, security, COVID has made us all a little bit more conscious of fear and security. And tragic as it may sound, we benefit from that because our biggest marketplace right now for security is Latin America, and it's absolutely exploding. Not only in terms of the virus, tragically, but in terms of investing in infrastructure to secure our cities. We benefit from that. Our largest deployment is Mexico City. We'll be at 40,000 cameras in another 2 years. We're at about 5,000 cameras right now, and it's an enormous growth area for us. So we've been fortunate.
For Visonstate, basically our customers need us at this point in time, as certainly restaurants and, public facilities start reopening. They have to put protocols in place in order to up their game as far as the cleaning and maintenance of the facility goes, otherwise risk permanent shutdown, which, as we know, has happened. So hospitals need us. We are seeing huge growth with hospitals. But as a general comment, facility management is a fairly labor-intensive exercise. And so they're always looking for better ways to utilize their staff and their resources. And, our analytics addresses that. We've seen huge efficiency increases across the board in terms of our customers utilizing our technology to be better at what they do. So, under, the current circumstance, although, certainly there's many that are struggling to get back, those companies need to instill a sense of confidence to the consumer or their patrons that they're taking proactive action on their cleaning efficiency, so that you feel comfortable going into that location in the first place. So really across the board, although some of our customers have been effective, they need our technology. And like I said before, it's actually a fairly low investment considering what the alternative is with regard to people's health and liability.
Very good. So on this one, we'll go Jay, John, and Silas. All of you are operating and selling on both sides of the border, and both the US and Canada have significant regional variation, even within the country, both countries. Adjusting for population, where are you getting the most interest and traction, and to what do you attribute this?
Oddly enough, our greatest revenue momentum and trajectory is right now in Mexico, not in the USA or Canada. We have a very large smart cities deployment in Mexico City that's just been expanded to the state of Juarez. And if you're in the business of security and you're deployed in Juarez, that's the varsity game. That's A-ball. You've got a real significant environment where there's a lot of stuff going down. So it's really interesting. That deployment's about 60 days old, and it's quite interesting. But in the U.S. marketplace, the retail has come back and has come back strong. In addition to that, in Mexico, we've seen some retail come on. As an aside, we're just now in the planning stages of our first Canadian retail coast-to-coast deployment. So thankfully, we're bringing some of this back home, and maybe a year from now, we'll be looking at a more of a balanced playing field in terms of where we're getting our revenue
from. Sorry, I couldn't remember who's next, but I think it's me. We're seeing growth on both sides of the border, actually, and really that's a function of our distributors because they have large presence in both countries. So I would say we're seeing equal growth between the two countries. And in fact, we're starting to see more growth globally as well because these are global distributors. Like anything, they wanted to prove it up in their own backyard. Now that it's proven and it's in some very prestigious locations, this lends to expansion globally.
So we're seeing the most activity and sales growth out of the US. With travel being not something that's possible, a lot of the sales growth in Canada does require a bit more in-person visits as we're trying to, massage that landscape. So we've definitely not seen as much growth out of Canada. It's purely been US. However, we are starting to see some of our existing Canadian customers who are on our legacy platform start to convert over, which we will believe start to kind of build that momentum to grow back into Canada. Part of what happened with COVID-19, being that we sell into government, is it sent a lot of municipalities and cities into, kind of analysis paralysis. Cities were looking at what the provinces were doing. The provinces was looking at what the national government is doing. However, in the US, most of these cities and states have a lot of autonomy over their budgets and decision-making for software. And so that's why we've seen a quicker churn and a little bit more aggressive growth out of the US. But we think that we'll start to see that going into 2021 in Canada as well.
Very interesting. So what we're going to do here, the last question, What milestones should investors be watching for from you? And let's start with John and then Silas and Jay.
Yeah, thank you for that. Milestones obviously measured in revenue and technology growth. And so, we have a very enviable position here at Visonstate because with our global resellers, we don't have to have sales staff. And they're utilizing this technology as differentiators. So it's very popular. It's the new thing in the market in terms of the facility management side. So we're seeing our numbers grow dramatically. And so that's one key milestone. The other key milestone for us is additional partners, both on the technical side of things and on the resale side of things. But sometimes they're one and the same. So we're consolidating as the definitive smart technology for facility management. And we're getting there very fast. And I think one of the reasons is because whereas, say Torque or Kimberly-Clark used to be seen as a competitor, now they're working with us for a combined solution, which is a natural evolution, frankly, of smart technology. If you look at what's happened in smart homes and that sort of thing. So the key indicators for us are definitely revenue and our ability to stay relevant and ahead of the game with our technology.
So I have actually blanked. What was the question, Mark? Can you repeat it?
Yeah, what milestones should investors be watching for?
So for us, it's just going to be continued sales wins. We've got an $18 million sales pipeline that continues to grow fairly precipitously. I mean, it was at $7 million end of 2019. We closed 2/3 of that, and now it's up to 18 million. So it's just going to be continued contract wins and announcements for trying to accelerate towards what our kind of near-term benchmark of 10 million in ARR, annual recurring revenue. Most SaaS companies and most experts will tell you who have gone through high growth SaaS companies that it's harder to scale from 3 to 10 than it is from 10 to 100. So really our first benchmark, what we're trying to accelerate growth towards is hitting that 10 million in ARR. And that's all going to be predicated on, closing sales and larger sales. And so we've got a lot in the pipeline, very near term and midterm that we're excited about. And that's really, our most urgent or visible benchmarks to look for.
There's two things that I rally the company around. Number one is revenue trajectory, and the number two is strategic partnerships. In the first category, we have a specific set of goals and objectives, and this is the year that we got to start putting points on the board. And we did that in the first quarter and the second quarter. It's now a question of following it up as we build that SaaS foundation. And the second thing is we've got some very strategic deals in the bag, and as we fortify those deals and make them public, I think that'll be a metric upon which we're going to be judged and how we govern the company's mission and direction.
Very good. Excellent answers all. Thank you to our presenters. May you have success in expanding your market share. John Putters, VIS, Jay Hutton, VSBY, and Silas Garrison, HS. And to you, our attendees, thank you for your time today. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. Be determined in your due diligence and ask tough questions. We'll be back September 23rd with more mining companies from CHF, and of course every Wednesday thereafter. This is Mark and Raj signing out from TakeStockLive.com.
Thank you.
Thanks.
Thanks, guys.